Hey everyone, welcome back to the short and long of it. I'm Scotty. In this video, we're going to be going over the LEAP strategy. Stay tuned for more. All right, continuing on with our second strategy here, LEAPS. LEAPS is just an acronym for a long-term equity anticipation security, or securities if you're buying multiple here. Long story short, for LEAPS, it's just a long-term option contract, whether it's a call or a put option. So if you're going long or you're going short over at least a year or even longer expiration date on it. So entering a contract today, the expiration will be March 2026. And the whole benefit of LEAPS is you're controlling 100 shares of a stock at a significantly lower price. That's what is the draw of LEAPS. But also you can still capture a lot of the upside when a stock moves in your favor. So for this example, I'll use a SPY, but you can do this on any ETF or any stock that your brokerage offers. You just have to look at the expiration dates that they also offer. But like I said, we'll do this on the SPY. But say we're doing this on an individual stock, you would want to make sure that you do your due diligence financially, technically, before entering this trade, right? You're not just going to buy a LEAPS, buy a long call option or a long put option just because some stock guru told you to. We're going to do the same thing that we always do. We're going to look at the financials. We're going to look at the technical analysis, and we're going to be patient, right? We're going to look for a good spot that we want to enter in long or short and make the trade. But we'll make the trade and be comfortable with our decision. We'll have a plan, right? Sometimes for LEAPS, people are like, to what end, right? Because you're going to hold this contract for over a year. Say you spent $5,000 on this contract, you're going to have $5,000 tied up for that whole year if you hold it through expiration. But you would have to have a plan. So do you want to make 10%? Do you want to make 20%? Do you want to make 50%? Do you want to make 100% return on this contract? It's up to you, right? So for me, I usually have a plan going in that I want to make about 20% depending what the underlying security is. So if it's the SPY, I'll typically do a 20%, 25% return, and then I'll sell the contract. But if it's something like a individual stock, like an Amazon of sorts, I'll look to hold it until about 90 days till expiration, and then I'll look to either cash it out or roll it to the next year out, right? And when you're rolling it, it should be for a profit. So I'll dive into SPY here and walk you guys through how much it's going to cost you as opposed to owning 100 shares of SPY. So if you're just going to buy 100 shares of SPY outright, right now it's right at $600 a share, so it'd be 60,000. So the benefit of LEAP would be significantly less. We'll dive into thinkorswim and take a look at the option pricing as well as strike price and all that. So as you can see here, we're in thinkorswim trading tab up here at the top, options chain. You're gonna have all the expiration dates for any given stock or ETF. Here I have the SPY, and like I said, you want to go at least a year out for LEAPS. So the further out that you go, the more expensive contracts are going to be, because the longer you have to be right. So there's a lot of intrinsic value there. So we'll go to the March 20th, 2026, a little over a year out, 391 days, and see what they have to offer. So like I said, current strike price of SPY on today is February 23rd, 2025, and $600. So if you want to buy a call option at the money, it's going to cost you $51.87 a contract, but remember this represents 100 shares, so this will be $5,100, $5,200 to own. However, when you're buying a lease contract, you want to capitalize on that intrinsic value here. So what we like to do is go to, at least for me, I'll go to a 0.80 delta. So just like in the wheel strategy, it's the opposite sort of thinking here. We want to be 80%. We want to have an 80% chance of being right at the end of expiration, that this price right here will be in the money. So 0.80 is, I think, is the happy place. Some people try to do 0.90, even 0.70. The benefit is that the delta also represents, for each given dollar that the underlying security moves, is how much the price of this contract will move. So it's basically 80 cents to a dollar. the more in the money that this contract goes. So if you're on the call side, so the more up, the more delta that the more delta it's gonna take on. So in theory, the ultimate goal here is to go from 0.80 to almost basically 1. So you'll really be emulating the price movement of the underlying security, which is great. Maybe you'll think about rolling it at that point to a 0.80. That's just essentially how it works out. So like I said, SPY right now, if you wanted to buy 100 shares outright, it's basically $60,000. However, if you want to buy this Leaps contract, it's $115 per contract, but it's going to be per 100 shares, so it'll be $11,500. Still a significant discount to enter in this trade to control 100 shares of SPY. That's basically almost 5 times over, 6 times over owning SPY, right, for the same capital. So the key point is that you'll have this money tied up for the duration of the contract until you move it. So the important part is doing your due diligence. So like I said, if you want to do it on something else on the SPY, because the SPY is the top 500 US based companies financially wise, you should know what's in that ETF. However, you definitely are shielded from the individual stock going up and down. But if it's an Amazon or a Google or Nvidia of sorts that you want to run this on, obviously do the financial due diligence on it. Is this company even a good company to run this on? Don't do it just because it's cheap or cheaper, right? That way you're comfortable with not only the money that you're having tied up, but you're comfortable when the stock is fluctuating, right, down and up. So if you buy this call option, and then 2 days later you have a day like we had last Friday where the SPY just tanks, you're totally fine with owning that call option, even though it's a little red at the time, because eventually that contract is going to recover because you're invested into a good company or a good ETF in this example. You'll purchase this contract here for 11,900. But what I like to do here is sort of, if this is this is Sunday, so market's not open, but I go to the mid price. You'll save a couple $100 here to go to the mid. So it's basically the middle between the bid ask. So the ask is what you'll always get filled out by the market makers. So you want to save a little money, set it at the mid, and just send it. The Leaps, like here, is telling me Thinkorswim's nice, where it's telling me, well, the price of the SPY will have to be about $5.98 for this to get filled. It's at $5.99, so $1 drop. So you can just hit confirm and send, and just let that ride and get filled, and you'll be fine. However, what I like to do, just because you're like, oh, I think Nvidia or SPY or whatever is a good ETF or a good stock, I'll just enter it here. What I also like to do, aside from doing the financial analysis, I also like to do the technical analysis. And maybe this is looking like a good spot to order, or maybe this is looking like a good spot to enter in on the SPY. It's sort of testing that 50-day moving average. Is close to the bottom Bollinger Band here. RSI is around 46. Looking at historically at the RSI down here at the bottom of the screen, 40s, it will come down and hit even 38. So maybe like wait for Monday or Tuesday market open, see where the SPY is going to go, see which way it's trending, and maybe you can get it even lower price at that 0.80 delta. That'd be good for you. But be patient when you're entering these contracts. Like I said, do your due diligence, but also be patient when you want to enter. Don't enter at the top of the Bollinger Band, right? Like, have a plan. Let's enter in maybe at the bottom of the Bollinger Band, or at a significant moving average, or even the 200-day moving average, right? You don't have to enter in now. We're just getting the tools to make this trade. And don't feel obligated to make your trade. I know a lot of people are going to say, hey, Scotty, $11,000 is a lot of money, and you're absolutely right. It is a lot of money. Don't be impatient and make this trade on some other stock that might not have as good fundamentals, right? Just stack your money. Maybe do even dollar cost average into the stock itself. I'm a big proponent of dollar cost averaging long-term investing. I have a whole account where I don't touch. I just dollar cost average into stocks like in ETFs, like the SPY, like Nvidia, like a Google, right? So keep these things separate. And if you don't have the money right away to do this contract, just stack your cash. But you can still use the same fundamentals, right, to enter in these trades. If you only have $2,000 to invest, Well, maybe the bottom of this Bollinger Band, right, is a perfect time to start dollar cost averaging into the SPY. If you do have the cash set aside, right, you don't want to use up 50% of your cash to invest into a leaps, right? So if you only have 20 grand, don't put 11,000 of it into a SPY. Leaps. Put it into the actual SPY. Okay. You can only take up, 5 to 10% of your overall capital in your account because it's so leveraged, right? And that has an expiration date. So that thing can go against you, right? You're not always going to be right. A lot of the time, it's time in the market, not timing the market. So a leaps definitely gives you time in the market, but you can have a 2022 situation on your hands and this thing can reverse and it can be pretty red, right? It can definitely go against you. People only think about the benefits like, oh, you can turn this 11,000 into 20,000, right? Sure, you absolutely can, but you can also turn 11,000 into 6,000. So always have a plan, do your due diligence, and don't just enter in on leaps because someone on the internet told you to. So aside from this, you guys have any questions regarding this video and leaps or the wheel strategy in my last video, feel free to leave a comment and I'll do my best to go through those and give you guys an answer, or at least my opinion. So I hope you guys find this information beneficial. Y'all be safe out there in those markets and take care.